We have had a ton of questions recently regarding high inflation. A, what the market does. B, during periods of high inflation. And the most important question, guys, what on earth should we own during periods of high inflation? The market has been very, very good to investors over the past couple of years. Things changed this year. What do we own during periods of high inflation?
I think a lot of times people say the term like get defensive, like that's what they think about, and it's like, okay, make companies that have good balance sheets, companies that make money, good cash flow. I think that's one way to think about it. The other thing to think about is like what sectors are going to make sense in an inflationary environment, and that's sometimes we get like, oh, let's buy this stock, and we talked about that many times. But I'll go with just a few different kind of looks here. We know about energy and XLE, but I'll give you two that are pretty obvious and should stand out there: healthcare and utilities. And those are two sectors that make a lot of sense: XLU, XLV. And truth of the matter is, it's not like you're always going to get crazy volatility out of these names. And sure, you've been getting a nice little bump, but relative to the overall market volatility, A, you're going to have less of it. B, you're going to be able to get a dividend. And then you're not having to necessarily pick the perfect name in there. Look, I like particular healthcare stocks. I like UNH. I like Danaher. You know, I like Pfizer, but a lot of times it is easier to get into that ETF, and everyone's talking energy. It's easy to say, okay, oil's still going to work. That's going to be good in an inflationary environment. That's a good place to go. But let's start thinking about those utilities, and instead of having to be an expert on which ones you should be trying to pick, go XLU. And when you think about healthcare, XLV also works as well. Other ETFs out there, there's, Vanguard has funds and whatnot. So I understand there's other places you can go, but sometimes let's think about the sectors themselves that are going to work there. And those are two that I believe can still be had.
So look, yeah, great points there on the ETFs, and actually stealing a little bit of the thunder here for me as well, but they're not those ETFs. Look, right now, Goldman Sachs, and I made a little note here because I'm well prepared. Goldman Sachs, 38% chance of recession in the next 2 years, okay? So, and then also 21% chance that we get to 30, I mean, here's the ES, hold on a second, ES $F. They say it's a 21% chance that we get to 3,600. So this is a daily here for the ES. They said a 21% chance that we retrace all the way back to 3,600, which puts us back to November of 2020. 2020 levels actually down here, 3,600. So if there's a 21% chance of that happening, that's a big move to the downside, right? So we'll see if that comes into play there, retracing down to 3,600. So, if that's what's going to be the case here, they also have a 20% peak to trough for this year, thinking that we could go down another 20%. Look, for me, if that happens, and I know Neil gave some very specific ETFs there, I'm going to go the complete opposite way. Like, I think, why bother? If we're going to go into a recession, honestly, why even deal with any of these names? I mean, UNH is a great name. UNH right now is at all-time highs today, right? And so healthcare is there. If you want to put your money into a name that's at all-time highs, fine. But what I'd rather do is, honestly, just start to pick this name up. If the S&P 500 is exactly, and this is going to be SPY, and hopefully it loads, if this is going to retrace back here to 400, 390, something like that, these levels, then look, let's start to pick them up. Let's start to pick it up. Start nibbling. You're going to start to nibble at the 200 period there. Then you can nibble again at the 50. We just had a major move down and a complete retracement, almost back to all-time highs. Like, what was up with that crash? If you just averaged into this, and I'm not saying you average in every $10 or anything like that. Why not take a piece now when this recession actually comes through? Then take another piece down here at 420-ish, right? Take that piece. And then as we start to nibble back down in, you can start averaging in. There's also ETFs that are what, SDS, where you get dividends for the S&P 500 stocks. So there are lots of names to play here, and I don't think it's wise. If you really think we're going into a recession, then I wouldn't buy anything, right? And that's why I go over here to the SPY and say, hey, look, there's a chance that we're all wrong and that some of the guys calling, we said the death cross of the yields, right? It's called 12 of the last 6 recessions. So think about that. It's called 12 of the last 6 recessions. That means it's wrong just as many times as it's right, okay? So you don't want to be caught not buying anything at the bottom. I would pick up the SPY. It's the ES. It's the S&P 500. Let someone else pick the stocks for you and just make sure you got the right levels, and I think you'll be okay.
Market's up 20+% the past 3 years in a row. Would it be the end of the world if we just went sideways even for the next year or 2 or 3 at this point. So have a list. I love that idea. Have a list of stocks you want to own regardless in the long term, going down the road, and work into them over time. There's a look, guys, at what we should do during periods of high inflation.